Welcome back to JPX Energy Market Weekly Updates. Oil prices started the month on a bullish footing, with Middle East benchmark Dubai cash for May breaking above $83 a barrel as strong data from China and Russia's supply cut outweighed fears of rate hikes. Crude oil futures Friday paired a sharp drop and were largely consolidating the week's gains as UAE officials say there are no plans to leave OPEC and will stick to the production quotas for at least another year. Intermonth spread, however, lost upward momentum, with the first month and the third month spread of major crude oil benchmarks settled lower by the European close. On the demand side, sentiment has been supported by renewed optimism around demand from top oil importer China. According to China's National Bureau of Statistics, China's PMI was reported at 51.6 last month, up from 49.2 in January, with a number above 50 indicating an expansion in activity. For the manufacturing sector, the index shot up to 52.6 from 50.1 in January, measures production, exports, and new orders all rose. The PMI rating far exceeded the analysis forecast of 50.5 and was the highest rating since April 2012, which are fitting the narrative that a 2023 China recovery is a real deal, and this could be a start of an upward trend for oil. In the physical market, China's global crude oil buying spree is seen extending into this month. It's reported that Unipac and PetroChina have both hired 10 super tankers, each with a capacity of up to 2 million barrels in March to haul U.S. crude back to Asia. Traders are also back on the market for Russian crude. A stronger demand has seen offers for April delivery equal to China's independent teapot refiners in Shandong province, with a rise to discounts of around $7 and $7.50 a barrel against June IC Brent futures on a delivery XG basis, according to Standard & Poor's Global. On the other hand, macro data and hawkish Fed speakers continue to highlight inflation fears are here to stay and sparking some demand concerns. The U.S. ISM manufacturing marginally rose to 47.7 from 47.4, coming in below expectations of 48. ISM price paid rose back into expansionary territory to 51.3, well above the prior 44.5 and expected 45.1. The Eurozone inflation also fell less than expected last month, reaffirming that it may be too soon to call goods inflation disinflationary. On the supply side, OPEC's crude oil production for February was on average 150,000 barrels a day more than it was in January, according to a Reuters survey. The group slowly raised its production targets last year as demand increased, but consistently failed to meet its monthly production targets. The market struck out the 10th consecutive week of crude oil stock builds in the United States, as more evidence of surging demand for U.S. crude oil barrels on the global market could be found in the latest EIA weekly report. The market struck out the 10th consecutive week of crude oil stock builds in the United States, as more evidence of surging demand for U.S. crude oil barrels on the global market could be found in the latest EIA weekly report. U.S. exports of crude oil have surged to record high, while still flat production level and a rise in refinery demand ahead might keep the inventory build smaller than in recent weeks. Okay, that's all we have for this week. Welcome back next week.